You've been told that buying the market is the safest bet, that diversification is your shield. But beneath the surface of your portfolio, there are hidden market forces at play that Wall Street isn't talking about. We are witnessing a silent coup, defined by asset management concentration. Trillions of dollars are funneling into the hands of just 3 firms, reshaping the financial power dynamics of the entire world. This isn't just about returns. It's about a critical investor rights impact that you probably didn't even know you suffered. While you enjoy the convenience of passive investing dynamics, you are unknowingly handing over the keys to the kingdom. The economic implications of investing blindly are hitting your wallet in ways that go far beyond the stock market. Capital management firms have become the new kings of capitalism, and they are playing a game with your money. It is time to understand the true cost of your silence and reclaim your individual investor influence. I'm going to show you how the machine really works. Prepare to see the system for what it actually is.
Let me ask you something that might shake everything you believe about your financial future. What if I told you that your 401k, your retirement account, your carefully diversified portfolio, isn't actually giving you ownership of anything, except the risk? You see, when you check your account balance and see those Apple shares, those Microsoft stocks, those slices of the S&P 500, you feel like an investor, like a capitalist, like someone who owns a piece of the American dream. But here's the invisible truth they don't want you to see. While you're busy watching your portfolio go up and down, sweating over every market correction, someone else is quietly wielding the real power that comes with those shares. And I'm not talking about some conspiracy theory cooked up in a basement. I'm talking about the single most consequential shift in corporate America that happened right under your nose, using your own money as the weapon. You've probably heard the names before: BlackRock, Vanguard, State Street. Maybe you even have money with them. Most people do and don't even realize it. But have you ever stopped to ask yourself what it actually means that these 3 firms are the largest shareholders in nearly 9 out of every 10 companies in the S&P 500? Have you ever wondered who's voting those shares when critical corporate decisions get made? Because here's what Wall Street won't tell you during those sleek commercials about passive investing and financial freedom. There's been a silent coup. Not the kind with hostile takeovers or dramatic boardroom battles that make headlines. No, this was elegant, quiet, and devastatingly effective. It was done with index funds, with the very strategy that financial advisors have been telling you for decades is the smartest, safest way to build wealth. You already passed by this moment without noticing it. The moment when diversification, that golden rule of investing, transformed from your protection into someone else's concentration of power. And what you're about to discover might completely change how you think about where your money actually is and what it's actually doing. Because the question isn't whether you should be investing. The question is, do you understand what your passive investment is actively enabling? Stay with me until the end, because once you see how this machine really works, you can't unsee it. Now, before we go deeper into this rabbit hole, I need to ask you something. When was the last time you actually voted your shares in a company you supposedly own through your ETF? Never, right? Most of us haven't. We own, but we don't speak. And that silence? That's exactly what makes this system work. If this is hitting home for you, if you're realizing right now that you've been holding the risk while someone else holds the microphone, do me a favor. Hit that like button. Not just for the algorithm, but because content like this gets buried when it challenges the most powerful institutions on Earth. Your engagement is literally what pushes this past the gatekeepers. And drop a comment below. Tell me I own, but I don't speak, if you've never voted a single share. Let's see how many of us are sitting in the passenger seat of our own portfolios. So how did we get here? How did millions of Americans hand over the most powerful tool in capitalism, the right to vote, without even realizing it? To understand that, we need to rewind to 1976. This is what I call moment zero. A guy named Jack Bogle did something Wall Street thought was insane. He launched the first index fund at Vanguard. The idea was beautifully simple. Stop trying to pick winners. Stop paying fund managers massive fees to underperform the market. Just buy everything. Own the whole economy at once. Wall Street laughed. They literally called it Bogle's folly. They said nobody would ever want a fund that just accepted average returns. But Bogle understood something profound about human psychology and market efficiency. He knew that most people don't beat the market, and paying someone 2% a year to lose to the market was financial suicide. So he offered something revolutionary: near zero fees, total diversification, and the promise that you'd rise with the tide of American capitalism itself. And it worked. God, did it work. Fast forward to today, and passive investing isn't just popular, it's dominant. Over the last 15 years, trillions of dollars have hemorrhaged out of actively managed mutual funds and poured into passive index funds and ETFs. We're talking about one of the largest transfers of assets in financial history. Today, more than half of all U.S. equity is held in passive vehicles. Your grandmother's advisor is telling her to buy VOO. Your colleague's retirement plan auto-enrolls into target date index funds. Passive investing won the war. But here's the transformation nobody warned you about. When you buy an actively managed fund, that fund manager is incentivized to engage with the companies they pick. They're doing research, they're voting proxies, they're occasionally raising hell in boardrooms because their performance depends on those companies doing well. But when you buy a passive index fund, something fundamentally different happens. You're not buying because you believe in Apple or Exxon or Boeing. You're buying because they're in the index. The fund has to own them. There's no choice, no belief, no conviction, just mathematical replication. And here's where the power shift happens. When you click buy on that S&P 500 ETF, you're getting an incredible deal. Maybe 3 basis points in fees, total liquidity, instant diversification. But in that transaction, you also implicitly hand over something most people don't even know they have: your proxy vote. See, every share of stock comes with voting rights. Votes on executive compensation, on mergers, on board members, on corporate strategy. In the old world of shareholder democracy, if you owned shares, you voted those shares. You had a voice. You were an owner in the truest sense. But in the world of asset manager capitalism, you own the financial risk and return, but someone else owns the control. You get the profit or loss. They get the power. And who is they? A shockingly small group of people. Larry Fink at BlackRock, the executives at Vanguard and State Street. Maybe a dozen individuals who now control the voting rights of the entire American economy. Not because they own the shares, you do, but because you gave them your proxy when you bought that low-fee ETF. This is the hidden cost of passive investing. The fee is almost zero. But the price is your voice. If this is starting to click for you, if you're realizing that the system you thought was built for you might actually be built on you, drop a comment. I see it now. Let me know this is landing. Now I want to go even deeper into how this happened, because it wasn't an accident. It was a brilliantly designed psychological trap that millions of us walked into willingly. The architects of this system understood something fundamental about human nature. We're wired for what economists call rational apathy. Think about it. You work 40, 50, 60 hours a week. You've got kids, bills, responsibilities, maybe a side hustle. When your retirement account statement shows up, are you really going to sit down and read a 100-page proxy statement from Apple debating board composition and executive compensation structures? Of course not. Nobody does that. And the system knows it. So they sold you on something irresistible: convenience. They told you that passive investing was financial liberation. Set it and forget it. Buy the index, rebalance once a year, go live your life. Stop stressing over stock picks. Stop paying those parasitic 2% fees to active managers who can't even beat the benchmark. Just own everything, pay almost nothing, and let compound interest do the heavy lifting while you're out there actually enjoying your life. And on the surface, that sounds incredible, right? It sounds like empowerment. It sounds like the little guy finally getting a fair shake in a rigged game. But here's the hidden cost buried in that convenience, the thing they don't put in the marketing brochures. When you went passive, when you embraced that set it and forget it mentality, you didn't just outsource your investment decisions. You outsourced your power. Because someone still has to vote those shares. Corporations still hold shareholder meetings. Boards still get elected. Mergers still get approved or rejected. Executive pay packages still get ratified. Climate policies, labor practices, political donations, all of this gets decided by shareholder votes. And since you're too busy living your life to read those proxy statements, the fund managers stepped in as your so-called stewards. They claim they're acting in your best interest, voting your shares responsibly, protecting your long-term returns. But here's the reality behind the curtain. They're not just voting on boring procedural stuff like which accounting firm to hire. They're voting on mergers that reshape entire industries. They're voting on CEO compensation packages worth hundreds of millions. They're voting on environmental and social policies that determine whether a company pursues profit at any cost or operates with some accountability to society. You thought you were just buying low-fee exposure to the S&P 500. But what you actually did was hand over your voting rights, your actual ownership power, to a tiny group of people who now wield it at scale across the entire economy. And because millions of other people made the same rational decision you did, those few people now control everything. This is the transformation that happened while we were all congratulating ourselves on being smart investors. We traded our voice for 3 basis points and called it progress. The system didn't steal your power. It convinced you to donate it voluntarily. And now that silence, that mass abdication of responsibility, is being used as a mandate. When BlackRock votes your shares on a controversial merger or a climate resolution, they're not just acting on their own authority, they're acting on yours. Your apathy became their legitimacy. Drop a comment if you're starting to see how deep this goes. Just right. I traded my voice. Now you might be thinking, okay, so some fund managers vote my shares. So what? As long as my returns are good, who cares? And that's exactly the mentality they're counting on. Because there is a cost to this system. A massive hidden cost that you're paying every single day without even knowing it. Economists call it the common ownership hypothesis, but I'm going to call it what it really is. The invisible tax. And it's showing up everywhere. In your grocery bill, your plane tickets, your healthcare costs, your internet service. Let me show you exactly how this works, because once you see it, you can't unsee it. Let's talk about airlines. BlackRock and Vanguard are the largest shareholders in Delta, United, and American Airlines. All 3. Now think about the incentives here. If you're a traditional investor who only owns Delta, you want Delta to absolutely crush the competition. You want them to slash prices, add routes, steal customers from United and American, whatever it takes to gain market share and drive up Delta's stock price. That's how capitalism is supposed to work, right? Fierce competition drives innovation, keeps prices low, and benefits consumers. But what happens when the same entity owns Delta and United and American? Suddenly, competition becomes a problem. If United drops prices to steal customers from Delta, that might help United's bottom line, but it hurts Delta's. And if you own both, you just moved money from your left pocket to your right pocket while eroding profit margins across your entire airline portfolio. So what's the rational move? Don't compete. Keep prices stable. Maintain the status quo. Protect margins across all 3 companies simultaneously. And this isn't just theory. Academic studies have actually measured this effect. Research suggests that common ownership in the airline industry has led to ticket prices being somewhere between 3 and 7% higher than they would be in a truly competitive market. 3 to 7% might not sound like much until you multiply it across millions of flights and billions of passengers. That's real money coming out of your wallet every time you fly. But here's the truly insidious part. You're not just paying higher prices as a consumer. You're also funding the very system that's keeping those prices high as an investor. Your index fund owns the airlines. Those airlines are less competitive because of concentrated ownership. You pay more for tickets. The airlines post higher profits because they're not in a price war. Your portfolio goes up, and you think the system is working for you. But in reality, you've been taxed twice. Once at the ticket counter, and once through reduced competition that stifles innovation and choice. And it's not just airlines. This same dynamic plays out in banking, pharmaceuticals, telecommunications, health insurance, tech platforms, any industry where the big 3 own significant stakes in all the major players. When the same shareholders control competing companies, the competitive fire that's supposed to drive capitalism starts to flicker out. Products don't get better as fast. prices don't drop as much. Innovation slows down because there's no existential threat forcing companies to evolve or die. This is the hidden cost of your diversification. You thought owning everything meant you couldn't lose. But what it actually means is that nothing has to fight anymore. The entire economy starts moving like a cartel, with your retirement savings providing the coordination mechanism. This is what happens when ownership becomes so concentrated that competition itself becomes irrational. If this revelation is hitting you right now, if you're realizing you've been paying this invisible tax while thinking you were winning the game, write in the comments, "I see the tax." Now I want to take you all the way to the top of this pyramid, because understanding who actually controls this system is where everything crystallizes. At the bottom of this pyramid, there's you. Millions of individual investors putting money into retirement accounts, trying to build a future. In the middle, there are the public companies, the Apples and Microsofts and Exxons of the world, supposedly competing in a free market. And at the very top, calling the shots, sit three firms, BlackRock, Vanguard, and State Street, the big three. Together, they manage over $20 trillion in assets. Just pause and let that number sink in for a second. 20 trillion. That's roughly equivalent to the entire gross domestic product of the United States. The combined economic output of the most powerful nation on earth, concentrated in the hands of three asset management firms. And with that money comes something even more valuable than the returns: voting power. The big three collectively control approximately 25% of the shareholder votes in S&P 500 companies. Now, in theory, 25% shouldn't be enough to dominate decision-making, right? But here's the reality behind those numbers. Most retail investors, people like you, never vote your shares. You don't even know proxy season is happening. You're busy living your life. So while the big three technically control a quarter of the votes, they effectively control the outcome of nearly every major corporate decision because they're the only ones consistently showing up to vote. They are the swing voters of corporate America. When a controversial resolution comes up, when a boardroom battle breaks out, when the future direction of a company hangs in the balance, it's not 10 million shareholders debating the issue. It's three firms in a conference room deciding which way this goes. And we're not talking about theoretical power. We're talking about real, tangible control over the direction of the economy. Let me give you a perfect example. In 2021, a tiny activist hedge fund called Engine No. One decided they wanted to force ExxonMobil, one of the largest, most powerful oil companies on the planet, to change its board of directors and shift toward cleaner energy. Engine number one owned less than 1% of Exxon's stock. In a normal world, they'd be laughed out of the room. You can't move a supertanker with a rowboat. But they didn't need to own Exxon. They just needed to convince the big three to vote with them. And they did. BlackRock, Vanguard, and State Street sided with this tiny hedge fund. And suddenly, Exxon had a new board focused on climate strategy. Three firms made that decision. Not the market, not millions of shareholders. Three entities sitting at the top of the pyramid just redrew the future of American energy. That's not capitalism. That's a boardroom oligarchy operating under the cover of your passive index fund. But the rabbit hole goes even deeper, and this is where the conflict of interest becomes absolutely staggering. These same asset managers who are voting your shares in companies like Exxon, Apple, and JP Morgan are also managing the 401k plans, pension funds, and corporate retirement accounts for those exact same companies. Think about the incentives there for a second. If you're BlackRock and you're managing Apple's employee retirement plan, a massive, lucrative contract, are you really going to vote against Apple's CEO when he's asking for a $200 million compensation package? Are you going to risk losing that contract by being a thorn in management's side? Of course not. The system is designed to keep everyone happy at the top, while the people at the bottom, the actual investors, the actual workers, get milked. Your money built this machine. Your passivity powers it, and your silence is being weaponized to concentrate control in fewer and fewer hands. If you're starting to feel the weight of this, if the scale of this power structure is becoming clear, drop a comment. Three firms run it all. So here's the question that's probably burning in your mind right now. Is there any way out of this? Or are we just locked into being permanent passengers in a system that's using our money against us? Because if this is just an exercise in showing you how powerless you are, that's not helpful. That's just depressing. But here's the truth that gives me hope. There is movement happening. There are cracks forming in this machine, and if enough people wake up and start pushing, those cracks can turn into real change. The establishment knows people are catching on. Politicians are starting to ask uncomfortable questions. There's even proposed legislation called the Index Act that's specifically designed to force transparency and accountability in how these funds vote your shares. And under that pressure, the big three have quietly started rolling out something they never wanted to give you. Choice. It's called pass-through voting or voting choice, and it's exactly what it sounds like. Instead of automatically handing your proxy to the fund manager, you get to decide how your shares are voted. Now, they're not advertising this. They're not sending you emails begging you to take control. They're offering it in the smallest, quietest way possible, hoping most people won't notice or won't bother. But it exists. BlackRock and Vanguard have started pilot programs, initially for institutional accounts but slowly expanding to certain retail investors. And this is your first strategy of resistance. Demand your vote back. Log into your brokerage account. Dig through the settings. Contact customer service if you have to. Ask if you're eligible for voting choice on your index funds. Because if the option exists and you don't use it, you're making a choice by default. You're choosing to let someone else speak for you. And that silence is exactly what keeps this system running. But let's say your fund doesn't offer voting choice yet, or you want to go even further. There's a second strategy that's becoming increasingly accessible thanks to technology. Direct indexing. This is where instead of buying an ETF that owns 500 stocks, you actually buy those 500 stocks yourself, directly in your account. It sounds insane, right? Who has time to manage 500 individual positions? But new platforms are automating this entire process. You get the same diversification, the same low cost, the same tax efficiency, but you own the actual shares, not through a fund, not through a proxy. You literally own pieces of Apple, Microsoft, Tesla, whatever's in the index. And when proxy season comes around, those voting rights are yours. Nobody can vote them but you. This is the restoration of true ownership in the digital age. It's slightly more complex than clicking buy vote, sure. But the trade-off is sovereignty. The trade-off is power. And here's a third move you can make right now, today, without changing a single investment. Audit your funds. Most people have no idea how their ETFs are actually voting. But that information is public. Every fund has to disclose their proxy voting record. Go look it up. See how BlackRock or Vanguard voted on executive compensation at the companies you supposedly own. See how they voted on environmental resolutions, on board diversity, on shareholder rights. If you discover they're rubber-stamping $100 million CEO pay packages while you're grinding to max out your IRA contribution, maybe it's time to move your money to an asset manager that actually reflects your values. There are smaller funds, more activist-oriented funds, funds that take stewardship seriously because they're not trying to manage the entire economy at once. Your money is your leverage. Where you park it matters, and the act of moving it sends a signal that reverberates far beyond your account balance. These aren't perfect solutions. They don't dismantle the machine overnight, but they represent something crucial, the refusal to be passive in a system that depends on your passivity. Every person who demands their vote back, every investor who chooses direct indexing, every dollar that moves away from funds with terrible stewardship records, that's friction in the gears. That's resistance. And if enough of us create enough friction, the machine starts to slow down. The people at the top start to worry, because their power isn't inherent. It's borrowed. It's built on millions of people like you making the convenient choice, the easy choice, the passive choice. The moment you stop being passive, everything changes. If you're ready to stop being a passenger and start being an owner again, write in the comments. I'm taking it back. Look, if you made it all the way to this point, you're not like most people anymore. Most people are still sleepwalking through their investments, still believing the story they were sold about passive diversification and financial freedom. But you've seen behind the curtain. You understand now that while spreading your money across the market might be good for your portfolio, The concentration of voting power that comes with it is reshaping capitalism itself. The era of blind passive investing is ending, and you're part of the minority that's waking up first. You're not just a source of capital anymore. You're an owner, and it's time to start acting like one. If this video changed how you see your investments, do me a favor, hit that like button. It tells me this kind of deep dive content is resonating, and it pushes this information past the algorithm gatekeepers who'd rather keep you in the dark. And if you want more breakdowns like this, more revelations about how the financial system really works behind the marketing and the jargon, subscribe to the channel, because this is just the beginning. We're pulling back every layer. Drop a comment below. I see the system. Let me know you made it to the end and you're seeing this clearly now. I read every single one, and it builds a community of people who refuse to be passengers anymore. And listen, if you think this is eye-opening, you need to see what comes next. Because these same firms are using something called ESG scores to manipulate entire markets, and almost nobody's talking about how that mechanism actually works. There's a video right here that breaks it all down. Click it, keep going. Because once you start seeing the system, you can't stop halfway. I'll see you there.